Okay, this is homework 11, chapter 11, and I'm just going to do the transactions or the entries for you, and then you will be able to do the retained earnings and the equity section from there. So let's look at this. We have a dividend payable, it looks like, and it says we're paying cash dividends that were declared last year. So all we're doing is crediting cash and debiting dividends payable to get started here. And then on April 10th, it looks like we issued 75,000 shares of common stock for $24 a share. And if you look up here, you'll find common stock is sitting at $20 par. So that means we've got three accounts we have to use. We have to use cash because we're going to receive cash. We have to have common stock, and we have to have excess of par. Common stock is going to accept the stock, and then this is going to record the amount of money that we've received over the par value in the equity section. So we have 75,000 times 24, which is 1.8 million, and then we have 75,000 times $20, which is 1.5 million. Difference between the two is the $300,000 in excess. And then along comes some treasury stock, and it appears that we have sold all of our treasury stocks, and we sold it at $26 per stock, and that was $650,000 that we've received. And then we have to go and we've got to look at, well, how much did we have in the treasury stock? Well, we had 450. So we have to take this difference again. You're going to have paid in capital in excess from treasury stock of $200,000. Then we do a stock dividend, and this is always fun. There are several steps to this, remember. First, we have to decide how many stocks do we have. Well, we had 375 to begin with, right here. We issued 75 right here. So we have 450 stocks out. We're going to multiply that times 4 and come up with an 18,000 share stock distribution. We're paying, or those stocks are worth $25 each, so that comes to $450,000 that the dividend is worth. So our stock dividends are costing us $450,000. Now the next thing you have to decide is, what is the cost of the common stock we're distributing? So we know that's 18,000 times 20 here, so it's $360,000. That's how much common stock we're distributing. The difference between the two is additional paid-in capital or capital in excess of 90,000. So come August 15th, right here, we're going to pay out this dividend, and all we're doing is putting the common stock out and establishing it into the accounts here. It looks like we then bought some treasury stock. And how many treasury stock did we buy? We bought 30,000 shares times 19, which comes to $570,000. So we've got we've paid cash of $570, and we now hold treasury stock. So now we're going to pay a dividend, and we're going to pay 10 cents on a dividend. So again, you're back to how many stocks do we have? Well, we had 450. We added 18,000. That gave us 468,000. And then we bought back, remember, we bought back 30,000 here. So we have 438,000 out. And we're going to multiply that times 10 cents. And that will give us 43,800. And that's our dividend. So we have a dividend, and then we have a dividend payable. Then they ask us to close out two accounts. The first one we're going to close is the income summary. It has $1,125,000 in it, and that happens to be net income. So that gets put into retained earnings. And then it says close the 2 dividends accounts, and those are always closed into retained earnings. So you have stock dividends credited for $450 and dividends for $43,800, and retained earnings then gets hit for $493,800. Those are your entries. Now you will do the retained earnings and the equity section. All your numbers are there. You just have to fill in the blanks. So that should pretty well wrap up your homework on that.